Welcome, Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. I'm Roger Thompson, BI's Regional Marketing Analyst. Ira, what are you expecting from the Fed's May 3rd meeting and press conference?
Yeah, thanks very much, Roger. So firstly, we do think that the Federal Reserve is going to raise interest rates by 25 basis points. I think but the statement afterward won't be as dovish as Jay Powell was during his March press conference. Remember, during March, you had SVB and Signature Bank were in the process of failing. There was a lot of angst over other financial institutions and contagion from that situation. Those seem to have mostly abated now, and I think the Federal Reserve will still then now focus on inflation and its ability to fight inflation. So the two things we're going to want to hear from him in that post-meeting press conference is, one, is there the chance that the Federal Reserve is going to hike again at June, and what it would take for them to hike? That's number one. And number two, if they don't hike, how long is it going to be, and what are the key triggers that would make them actually start to cut interest rates? In our view, they're not going to cut interest rates this year, and maybe even deep into 2024, because inflation is likely to still be a pretty big problem.
The yield curve shape is critical for many markets. How do you see it moving towards the end of the year?
Yeah, so if we're right and the market doesn't price or prices out some of the cuts that are currently being priced for late this year and early next year, I think that the market's going to price for much deeper cuts later. So what that means is, as we progress through the year, firstly, the 5-year Treasury will start to outperform on the yield curve, and then the rest of the curve will steepen quite dramatically. So you wind up seeing, firstly, the 5s, 10s, and 5s, 30s curve steepen, and then you start to see the 2s, 10s, and 2s, 5s curves start to steepen very dramatically. And it's going to be bull steepening, we think, which means that the front end of the curve is going to see much lower yields than the back end, which might not move very much at all.
Thank you, Ira.